I would not wish upon anybody my experience in the public markets. Grant Cardone buys real estate. It's not marked to the market every day. So his risk is, look, I bought this property, look at it again in 5 years. My risk is people look at it again in 5 hours. And you could be a hero 1 minute and a zero the next day. The way it is today, it's so short term with Robinhood and Webull and the trading of things. There's so no concern for what they own. They've threatened my family, my kids, my wife. It is a cesspool on Twitter and stock Twitter. Just say to people, you really have to understand what you own or you're a trader. You can't be both. When you are building your own business, don't take advice from anyone that hasn't made a payroll. Never. I get people all the time to say, oh, your background, you got sued. Okay, well, let me tell you something. If you're looking for people to help you that have never had any problems, keep looking. You can get through pretty much anything as long as you don't lie to anybody. As long as you don't lie to them, people will want to help you. If I were to tell anyone today who was an entrepreneur who wanted to go public, and I help a lot of people do that, go public is do not do what I've done. It's not for the faint of heart. I wouldn't suggest it.
Welcome to Success Story. I'm your host, Scott Clary. The Success Story podcast is brought to you by the HubSpot Podcast Network. HubSpot does a ton for entrepreneurs and business owners. That is why I'm so proud to partner with them for over 3 years now. If you need anything to build your business, help desk software, payment software, email marketing tools, CMS and blogging tools, SEO tools, deal management tracking, pipeline tracking. You don't need more tools to get more out of your business. You just need HubSpot. Their all-in-one customer platform is a dream come true for every member of your team. With best-in-class campaigns and workflows to generate more leads from marketing, category-leading pipeline management to help with sales, help them close more deals, powerful AI chatbots, and a knowledge base to help your service team scale, and it is built to deliver results, to drive revenue faster, and to help you grow your business. So dump the disconnected tools and the chaos that comes with them. Discover what HubSpot's all-in-one platform can do to streamline your business. Visit HubSpot.com to grow better today. You never take a day off. Is this true? Is this healthy? Is this something you recommend?
It is true that I don't take a day off. I think there are like shades of gray a little bit where when you consider if you're on vacation and you're doing maybe a few hours of work a day off, then I guess so. But the answer is no.
By the way, I'm the same. That's why I asked.
Yeah, I don't think it's possible. And the reason why is because in the beginning, it was, how do you get anything started? Towards the 10% into it, we're started, but we still need capital. And then halfway into it, we're way bigger, but we still need capital. And now there's fires that are being created by having a bunch of businesses. And now here we are. I'm 54. I really started the current venture, restarted in 2017, give or take. And we were $0 in 16. We're going to be 200 million or so, we believe, in 24. And that number is exponential. So the problems are still there. And I don't know that I can psychologically take a full day off. I would love to, I think. But we're probably past a point where it wouldn't be possible for me to not review a number or read emails or research something that's happening or think a problem through. There's this Warren Buffett conversation where he says that sometimes he just thinks. I used to think, well, how do you just sit around and think? And the reality is now is I probably spend half my time thinking because I have to come up with a way of dealing with something and then think through, if I deal with it this way, what ramifications there are. I don't know if you could take a day off if you're the actual person in charge of the entire enterprise. Maybe you can. I haven't felt it.
So you went from 0 to 200 million end of fiscal year 2024, presumably projected out in 14 years. That was really, and that was all allocating capital. Maybe just walk people.
No, I think it's 6 years. It's
6. Oh shit! So even better.
Yeah,
Okay,
6 years.
Even more impressive, regardless. So 6 years.
Yeah.
So walk people through your story, because you started off on Wall Street, correct?
Yeah. So my story is one of evolution. I basically, at a young age, decided I either wanted to fly a plane or work on Wall Street. One of my friends from high school, she said to me, "Why don't you work on Wall Street? You could afford your own plane." I thought it made logical sense at the time, because my research into my flying career was really one of which I would probably end up flying heavy jets, not fighter jets. And so my friend at the time flew for Federal Express, and he said to me, the only difference between him flying and flying a commercial airline is that he's a bus driver in the sky, but the boxes don't talk back, the passengers do. And he really said to me, you will be limited to your income. And at the time, I think he was a captain, so he was making like $220,000 a year. Now, this is 30-some years ago, right? So back then, that was a fortune, right? You know, he was making great money. It was like $20,000 a month being a Federal Express captain. And I just could never see past that money. So I thought, well, that's still good money. But ultimately, I concluded that I would like Wall Street better, and there was a lot of the deal-making aspect of Wall Street that I really liked. And so I spent the first sort of 20 years of my life or more working like specifically for a Wall Street firm or my own hedge fund, but I was always a registered broker, so I was always in the mix of the first 20 years of Wall Street for sure.
And so then the most recent version of what you've done over the past 6 years, what was the impetus for that? What got you to the point where you said, listen, I want to build my portfolio up, I want to allocate capital, to the point where you've built this thing that is pushing 200 million? Obviously, you're still heavily involved in the day-to-day, so you're not just allocating capital and acting like maybe a traditional private equity firm would. Just walk me through sort of like your thesis for what you're building now.
Well, we're for sure not a traditional private equity firm. I can tell you that. So I think what happened was there's this driving force initially that I believed that I should run a holding company similar to what Warren Buffett was doing, similar to what Lowe's does, similar to Big Clary Holdings, similar to a few other holding companies. And about 6-7 years ago, I just really came to the conclusion that I wasn't really doing that. Still fatal flaws in my arguments. I'm not going to say that I had discovered the solution, but I really wanted to make this hybrid permanent capital model where my holding company was publicly traded and there was a form of permanent capital in the business. You see that now with traditional private equity firms. They're bringing in some permanent capital. Apollo is really big on insurance money. They're one of the bigger insurance operators in terms of the annuity business, the settlement business for life insurance. But about 7 years ago or so, I decided, I was not getting any younger and that I needed to make the transition to that sort of permanent capital model. And it hasn't been easy. So what you see is a hybrid of a holding company / private equity / venture firm acquiring undervalued assets and investing in ideas, but probably a miscalculation on my part about how Wall Street would reward the hyper growth of a holding company that was in multiple sectors. So, I'm still a Wall Street guy at heart. I'm still a capital allocator at heart, but I've had to learn to be more of an operator than I wanted to be, because it's really hard to get people to stay with you on your course when the equity of your holding company isn't keeping up. So that's a more of an eclectic argument, but we're really more of a hybrid now, where we are migrating to a pure either private equity or private credit, but held by a public company. So we're still a holding company, but with a hybrid approach.
So I'm curious why, and it's probably due to just where you came from in your experience, but when you include the public component to it, all of a sudden you have a whole other set of problems, problems and opportunities that you can take advantage of or could sidetrack you. So is there a particular reason, and it could just be your experience, that you chose not to just build a holding company that was not publicly traded, that was private, that was traditional private equity model that didn't have a public component or even a venture model or any model really?
Well, I would equate something that I would warn everyone about in retrospect. This is the value of hindsight. If you ask me today, I would not build a holding company. I would not put any ventures or non-proven models in a holding company structure as a public company. I would not do things today the same way I already did them, right? And that is, when you have something that is not a going concern, meaning it's not producing its own cash flow and it needs a lot of growth capital, I equate running a holding company today where you're a growth company and you need money as you're laying the pavement while you're driving the car. And it is very difficult to navigate the potholes, the problems with the pavement, uneven. It's very difficult. I would tell you that I probably made it innately more difficult than it needed to be, but I knew how to access capital, the public markets, so I went with what I knew. And because I knew how to access public market capital, we've been able to raise hundreds and hundreds of millions of dollars. But that hasn't translated into the value of the holding company model versus the capital raise. The businesses are doing great relative to where we want them to be. They're not all perfect. In fact, when you look at the way we built the holding company, it's really sort of like the equivalent of 18 to 20 businesses, which looks more like venture, where you have 4 or 5 that are doing well, one that's an outlier, and a bunch that are sort of mediocre, right? And unfortunately, since you consolidate as a public company, all of those combined up to your consolidated financials. So
okay.
I would not wish upon anybody my experience in the public markets. If I were to tell anyone today who was an entrepreneur who wanted to go public, and I help a lot of people do that, go public as a pure play. Go public as here's what I'm doing. I'm doing a SaaS model. I'm building software. I'm building a restaurant chain. I'm building a group of mechanic auto repair dealerships. Do not do what I've done, which is this buy everything, build a $1 billion conglomerate, which is what I think I'm building, and go through the pressure of what I've experienced. It's not for the faint of heart. I wouldn't suggest it.
No, I have no doubt, because venture is already super high risk. I mean, even for I'll use personal experience, and I've never played at the level that you're playing at, and maybe one day I will, and maybe I'll just learn from the mistakes.
I suspect you will. I suspect you will play at that label with the social club and what you have going on. I suspect you'll be at a bigger level than I am. But anyways,
I appreciate it. Maybe we'll do some stuff together. But regardless, it doesn't matter. This is not a competition. But the point is, even private venture that I've put money into, I've lost significant amount. So then I moved to, just as an angel, as an individual investor with no affiliation with a fund or a firm, that I moved into. We talked about this last time on your show. I moved into private equity, which is really just looking at historical P&Ls and just seeing that the business has some run rate and some proof that it can actually sustain itself in the market. And then there could be some profit there too, if you're lucky and fortunate. So this is just, I already de-risked. So not only are you adding the market making and the regulatory and the market sentiment of a public company, now you're combining the risk of, is the company even going to work out? If you have part of the portfolio, venture, early stage, do you have pre-rev?
Yeah, we have some pre-rev companies that we don't do them anymore. But as of right now, we don't do any more pre-rev companies. But we've done a lot of pre-rev. And what I would say is that when you are a public company, you're on a 90-day shot clock. Michael Dell talks about this 90-day shot clock, every quarter. But more importantly, when one person invests for one reason, my discovery is, and I never want to bash investors, but my discovery is investors follow exactly what they think they're following. Meaning, we're a Bitcoin miner. We've invested in Bitcoin. We mine a lot of Bitcoin.
That's one of the holding companies, just for clarity, right?
That's right.
That's one of the portfolio.
Yeah, it's inside the business called Sentinum. And when we were rallying with Bitcoin, and Bitcoin was parabolic from, say, 5,000 to 70,000, people would trade us. And then later on, when we announced we bought hotels, they're like, wait, I bought a Bitcoin miner. And they clearly didn't read our financials. They didn't read our intentions in 2017. They did not read that we were going to become a holding company. So then I alienated a whole group of investors who were like mad. Like, you're doing all this other stuff, Todd. Why are you doing this? And I said, well, did you read what our plans were? And the answer is no. And when we went from I'm just going to pick a price. I'm going to give a big disclaimer here for financial purposes. This is just a guess as to what things look like. I don't know this to be factual. But let's assume the stock was like 30 cents and it went to $10. I think that actually happened in some of these pre-split issues. People bought into the momentum of what we were doing and not the whole picture. So we went to 50,000 shareholders back to 10,000 shareholders. And on the way down, when Bitcoin went back down to like 15,000 from 69,000, people sold us off so much that we had to reverse the stock, and it didn't matter what news we had. In fact, just a few days ago, we reported a first quarter profit and sales up, I believe, 55%. The stock went down. The stock went down. So I don't know what to say to anybody. I'm the most perplexed I've been at ever. And we have an AI data center in Michigan that has 30 megawatts live that's going to go, we believe, to 300. People are discounting it to zero. So I would say the ramifications of being public, you said it, are it's the investor perception. It's actually what's happening with the market. It's actually what's happening with the company. Employees that work there see the price down. And so there's so much different about being public. And I want to make a point here, and that is, I'm going to use a guy named Grant Cardone. Grant Cardone buys real estate. It's not marked to the market every day. There's not a daily quote. So his risk is, look, I bought this property, look at it again in 5 years. My risk is people look at it again in 5 hours. And you could be a hero 1 minute and a zero the next day. Now, I'm not looking for sympathy, but that's not something that I thought would have existed the way it is today. It's so short term with Robinhood and Webull and the trading of things. There's so no concern for what they own. And there's also a forum they've threatened my family, my kids, my wife. They've taken pictures of my family. They put my son's picture up with, they put fake pictures up of people. It is a cesspool on Twitter and StockTwits. It's a cesspool of made up stuff. People call me all kinds of names that aren't even fundamentally true. They just make stuff up. Now, I'm not saying that to get sympathy. I understand the marketplace now more than I did before. And I would do it differently, but I'm grateful for where I am and the people that are stuck with me. We still believe in the company. We have 700 plus employees. We're very happy with where we are. We're just, the public markets can be really a dangerous place. And I would encourage everyone to think more about a singular play than I would be this sort of global macro play that I was working on.
So many different places to take this. It's just wild. It's wild that you have to go through this too, and the attacks and whatnot. And people, see, the difference is when things are private, you're dealing with investors that understand the game. And like you said, with Grant Cardone, they're not looking at percentages every 5 hours, right? Or points every 5 hours. So with you, you're looking at people that maybe put in a little bit too much money, or they're not educated investors, even if they, by definition, are, and they don't understand how the market moves or how this piece of news they saw on Twitter maybe isn't even true. So you have all these different factors that are impacting. So sort of two questions, because there's a question for the person who wants to invest, and then the question for the founder or even yourself that wants to play in public markets. So for the person that wants to invest, what noise should they listen to?
I think they should really read the management's descriptions and the 10Ks and 10Qs and really read what's happening and look at what businesses they're in and decide whether they want to be part of that, and understand that the riskiest part of the capital stack is being a common shareholder. So if you look at our public company today, and I'm not soliciting anyone buy our stock, let's be clear. But if you look at our preferred stock, which pays a 13% dividend on the $25 face value, it's never missed a payment. And it's trading at a premium to the price we issued it at. We issued it at $24.50. It's trading, I believe, today at $27. So the 13% coupons on 25. This thing traded down to like 10. So you got the preferred trading at a premium value, money good, and then you have the common trading at what I consider to be a giveaway, way below book value. And I would just say to people, you really have to understand what you own, or you're a trader. You can't be both. I don't think you can trade, and I mean, you possibly could understand what you own and decide to trade it. But my instincts is like with this meme thing that happened after COVID, that we kind of got caught up in that. And we're not ignorant to the fact that we did get caught up in that. But what we are not ignorant to is that we told people what we were going to do. We did exactly what we said we were going to do, and then people are mad about it, which we said we're going to raise a lot of capital. But listen, I'm not complaining. It sounds like I'm complaining. I love the company. I love the people that have been supportive, and it is the journey we decided to take. And would I do it differently? Probably would. Yeah, I would.
Is there an option for you? Again, I think this whole podcast has to be filled with disclaimers that these are not actions that you're taking, but I'm just curious from a strategic perspective, like advice to people that were on the come up that want to do something similar or adjacent to what you're doing. Is there opportunity to divest companies and focus on just one particular category or industry? Is that a smarter play? Is that like a less stressful play? Think about it as a hyper niche down investment thesis.
So we have divested our EV charging business, and was our defense. We have a small defense EV charging business called Turn On Green. We divested that, and I think we dividended out 140 million shares and 140 million warrants to shareholders over the last year. And we have told people we probably will divest more stuff. There's more companies that will be divested. But we've mainly got this down to around, we have a data center business and Bitcoin mining operation. We have a lender. We have a hotel portfolio. We have a crane business. We have a global defense business. Those 5 businesses are now doing really well for us. And so we're kind of staying the course right now. We want to give our staff time to catch up with all the changes and financings we've done. Get a bunch of reports under our belt where, we just were profitable for the first quarter. We want to take our time with any changes. We're not raising money on an ATM anymore for 2024. We really minimize that. My parent company, Ault & Company, which owns Ault Alliance, has invested $44 million. We went out and raised money to invest in the company. We're now the largest shareholder. So we're really taking our time because we're going to focus on the things that are EBITDA cash flow positive or EBITDA positive. And the ones that are not, that are those either pre-rev or the revs are generating, they're moving forward, but they're not profitable yet. Those ones will ultimately probably become pure plays. I think that we've conveyed to the market that we want things to be able to be sort of on their own. But there's a lot of companies in there, and so it's hard to explain that. As a public company, you really don't say anything until you've pretty much done it, right? So we talked about our plans, but
careful.
Yeah, we've talked about our plans, but we do plan on focusing in a couple key areas. We obviously are big believers and lucky to be in the data center business. We have 2 facilities in Montana and 1 huge one in Michigan. The one in Michigan is the holy grail of our portfolio. It is 34.5 acres, 14 acres under roof, expandable to 1.5 million square feet or more. Currently 617,000 square feet, currently 30 megawatts live, mining Bitcoin, converting to AI. We actually have built out 100,000 square feet of the AI data center. So that business is ramping. Our crane business is EBITDA positive. Our lender just reported a profit for the first quarter. So I'm getting a lot more comfortable. If I were to say anything,
you're getting some breathing.
If I were to say anything, 7 years, 6.5 years into it, things are a lot better and a lot easier to manage than they were before. But this goes back to there's not an overnight success. We thought this was going to be more overnight. We laid out a 10-year plan in 2017. I didn't think it was going to take 10 years. And I look okay on camera right now, but I saw some pictures over the weekend, and my hair's gray, really kind of white, actually. So this has been and once again, not looking for sympathy. I'm a lucky guy, married to the right woman, 4 great kids, a bunch of great employees and partners, but it's not been easy for everyone. It's a really, you have to be prepared, whether you're in a holding company with multiple holdings or where you're in a single pure play. It's trench warfare.
Is there a difference? Because now you've done these acquisitions and you've been doing them for a while now. Is there a difference in what you look for in a company that you would acquire in a publicly traded holding company versus something you would acquire in a private acquisition?
I don't think there's any difference for me other than whether the management, the people that run it, are honest with you. It's really tricky if you don't ask the right questions. I have this lender that's lent me a lot of money. I think they probably lent me, I don't know, 50 million, maybe more. And I used to get really irritated with them where they would ask my team, they would ask me the questions. Then they would interview my team and ask them the questions. Then they would come back and ask me new questions. Then they would interview my team again and ask the same questions. And eventually, after they asked the same question like 6 times, I would say, you've asked that question a bunch of times. Yeah, we're going to keep asking it to see if we get the same answer. And if a person knows that they know the model and there's something hidden, they need to tell you what the risk of the deal is. And an honest person selling you the company would say, yeah, here's the EBITDA, here's the company, here's our history, but what is it I'm not telling you? What is the real problem that could pop up in the business? What is the contingent liability? And I think it's really hard to find people that want to be honest and not blame others for your problems, right? I say this in the sense that I'm more concerned about the people that are running it than I necessarily, because the business is going to be good or it's going to be bad. And you don't know for sure. But the people running it are either good or bad, and that you need to know. You need to know whether they're honest and whether when you acquire them, they're going to stay and be honest with you about what's happening, or they're going to say, hey, that was on page 47. I told you that, there was a contingent liability. Well, I didn't see it, right? You didn't tell me that you were a week away from losing this contract. So I would say people are the number one issue. And I used to think that was corny, but people are pretty much all that matters. Now, if you got a great product, that's great, but you need great people. That really is important. If there's one lesson I've learned is that people who are not honest will blame you for their problems, even though they already had them. And
I love that.
It's really critical that you understand that I get upset about things, but at the end of the day, the reason probably we started this conversation off with that I work every day, at the end of the day, I believe everything is my responsibility, even if someone else messes it up. So that's why probably I have lenders and investors that despite things going wrong, know that I'll tell them the truth and I'll get them paid back. I try to do things that allow me to shoot my way out of a problem. And one thing I don't do is turn my back on someone that's honest with me. If there's an honest mistake, they're going to stay, they're going to work with me, and I'm going to work with them. But the deception part. I'm sure you've invested in a lot of companies, and that person that blames you for the problem versus takes responsibility for the problem. And that's a hard thing to do. When you acquire a company, you need to know what management comes with it.
The issue is that usually that behavior shows itself far too late. It shows it later on, right? It doesn't usually show it when everyone's feeling good and everyone realizes they're about to get a check. Everyone wants to play ball when you're sitting down at the table the first time, but you realize 6 months later. It's not, by the way, we're talking about acquisition or investing, but this could be a business partner. This could be even if you get a job and you have a shitty manager and all of a sudden you realize they're gaslighting you. Like this is just the people you work with make a huge difference. It's no different when you acquire a company, but I've done it with business partners.
Mm-hmm. I have people that have taken a role with me and maybe they left somewhere else and I tell them how they'll get paid and they get paid exactly that way. And then they're mad later and complain to the whole company that they aren't getting what they used to get at their old job. Well, I didn't make you come work here. And also when you're then complaining to others at the company, you really end up being, those people end up getting fettered out anyway. So eventually they ultimately don't work here because they can't, either they change their attitude or their attitude changes where they work, right? Because they're not happy. I just want people to be happy. Like I quoting Gary Vee, don't you want to be happy? Because the reality is that is the only way that things work out. And people will make meaning of things. They don't like change. That's another thing too. I tell people all the time to read that book, Who Moved My Cheese? Because they realize, like, the people that, you've seen this with Steve Jobs, right? Where he's in a garage and they're all happy and they're all drinking beer together and making a company. But ultimately, my responsibility now, I spend almost all my time thinking and structuring the finances of the company. And it's not the same. I don't have the luxury of hanging out all night and going to have a beer with people when I got 4 institutions waiting for a proposal from me and I got covenants I got to meet, and it just doesn't. So the evolution of that is the human condition. And that's where it's so much easier if a person's unhappy for them to tell you they're unhappy, but it's so much harder for a person to tell you they're unhappy. It's the strangest thing. People tell me all the time I'm intimidating. They're afraid to tell me something. Yet I find that I'm the easiest to talk to, and you can say whatever you want to me. But don't blame me for your fucking problems. Like, don't blame me for your problems if you accepted the deal. Like, you can't blame me for that, and I didn't do anything to you. And that's the biggest problem with managing people, is they believe that something's done to them. And the best people accept what they've allowed to have happen, and they come to someone like me who would say, well, if I did that to you and that was my fault, I apologize. Let's fix that, right? So managing people is the hardest thing in the whole world. If I say that to anybody, anyone who says it's not is full of shit. It's so hard to manage people because everyone has their own problems, their personal problems, their family problems, and then their business life. And by the way, it sounds like to me, if you watch this podcast, you're not going to want to start a business, and you shouldn't. You shouldn't. If you're not prepared for what's going to happen to you, you shouldn't start a business. Because I can tell you, people today that are your friend will sue you later if you make a lot of money. I've been sued so many times. It's ungodly. I got sued by a guy. I think it's still going on 5 years later. I got sued by a guy who had a $54,000 bill from me and sued me for $6.8 million because I terminated him. He was a contractor and claimed that I was going to give him a percentage of the company. None of it's true. And yet here I am. I did not want to be a stipend for lawyers, so I basically defend myself. And I do not settle a case ever unless it's gone a long ways for me to understand their claim. I am not a stipend for lawyers. I just don't sit here and let people sue me. And I'm not afraid. I'm a battle-hardened litigator. And I'll litigate if you're going to try to wrong me or my company. I'll litigate. And a lot of people are afraid of that. They're afraid of lawyers. They're afraid of the IRS. They're afraid of their rights. Of course, we're in a country now where our rights are a little weird. That's a whole different conversation. It's funny.
By the way, I've noticed that because I find that a very American thing. I've never been sued by an employee until I've come down to the U.S. or a contractor or anything, and now it just seems like people just use it as a tool. It's like any other business tactic. In Canada, I don't see it as much. I see it as more of if you have been financially wronged in Canada, you get sued. But you let somebody go in the U.S., and I mean, it sucks letting people go, but this happens when you're building a business. Suing and having to let people go and firing people, terminating whatever, it's going to happen if you build anything significant. So, yeah, it's tough. But the added tough is when they're a sales rep, they don't hit their numbers, you terminate, and then they come after you for nothing, like literally nothing. But they think that for whatever reason, you're going to fold and you're going to settle.
And most people do. Sense. Most people look at it as a cost of doing business. I simply don't. I made it. If you look at our financials, you'll see our legal fees. I just defend everything because I'm not going to be a stipend for lawyers. I made a decision 5 years ago, and I have 3 full-time lawyers that work for me: general counsel, deputy general counsel, associate counsel, and then 2 outside law firms, 1 litigation firm. And I don't sue anybody unless they need to be sued. I am not the aggressor generally. I would say 95% or more of the time, I am not the person suing. I'm the person getting sued. And when they sue me, I look at the case very seriously, and I generally will fight it if I believe if we did something wrong, we'll try to settle it. If we thought we did something wrong, but the people that have been with me a long time, especially lenders and investors that know me, know that I paid everyone back. And anyone who stuck with me in any period of time, I don't know, I got to probably put 400,000 disclaimers in this possibility. But if you've invested directly with me, not bought my stock in the open market, but if you've invested directly with me, you put money to work with me, you wrote me a check for a private placement, I don't think that there's any 5-year cycle where you're down. I think there's big drawdowns. I had a lot of people that took a drawdown after 2009, and they participated with me in a private deal that went public, opened first trade for $3.3 billion, and they got all their money back plus a return on their investment. So I generally do not leave a dead body behind. If I feel like I'm starting something and I owe you money and you put some money at risk with me and it didn't go right, I try to put you in a deal that helps you make that money. So listen, am I perfect? Not even close. You know, when you look at my background, you probably say, wow, you got a lot of stuff in your background. And it's true, but the only way you kind of get that is to do deals, and things go wrong and things go right. It's the nature of it. You don't really see these stories out there. Maybe, Scott, you have, but like Mark Zuckerberg starts the Facebook in his dorm. But look at even that resulted in tons of litigation. One of his partners, one of his roommates, the Winklevi, all these things. You know, it's the nature of business. It's just the nature of it. And as a public company, you get a lot of scrutiny for, there's a lot of keyboard warriors that say a lot of stuff that they don't really know what they're talking. But that's the nature of being public, and I don't want to dwell on that. I feel like I've dwelled on.
No, I think it's difficult. I think that even if you're private, you're going to get this stuff happen to you and to your business. So I think actually the takeaway is, first of all, anybody can figure it out and deal with it and survive in spite of it, but it's not going to be easy. But that's okay, because anything worth doing is never going to be easy. But I also think it's good to have conversations like this, because then it normalizes what's going on in someone's life. So someone who doesn't have a mentor could be from maybe not a big city USA who's killing it, who's getting their first lawsuit. That's super stressful. And it shouldn't be that stressful. And there's different ways to work through it. And maybe don't let lawyers take advantage of you either. But the point is, this is part of what we're doing here. This is part of business. This is part of life. And be an ethical, good person, and always do things that you know are right and honest. And I think that's how you sleep good at night, even if somebody else is trying to take advantage of you. It sucks, but it's life.
You have your Success Story podcast. What I would say to people is, it's taken me a long time to learn this, but I inherently figured out how I got here, and that was I would endlessly learn. You hear these statements about endlessly learning, but like if you were to watch every podcast that you put out, if a person did that, made a commitment to say, I'm just going to listen and get something, I found that I could always get something from every single one of your podcasts, which is that if I listened to what the person did, I could apply some of that lesson to what was happening with me. And you need to constantly be reminded every couple weeks, if you're on the journey of entrepreneurship or starting your own company or buying a company, you need to remind yourself that this is happening in other places, and there are creative ways of getting out of it or working around the problem. The problems are different, but they're all the same. You just have to listen to enough people. And with your podcast, since you're not really being spoken to in the sense that you're paying for it, you're able to listen to it. There's a lot of free information that can help you. And that's probably what's changed for me, is I spend a lot more time listening and learning than I do doing, because I can apply it, right? Like I try to, so I'm one of those guys that looks at Edgar as public companies. Almost every deal that comes out on Edgar, I try to read what the transaction was, who did the financing, what was the investment bank involved, how did they raise the money, what was the structure of the deal, what kind of EBITDA did they have or cash flow, Who did that private equity deal? Why did they do that? Well, that's in my world. I need to know that stuff, right? But I promise you, if you're going to start anything, you can watch one of your success podcasts or a few of them and go, okay, I can, this person's in something similar. You got to absorb that. You've got to, if you can't afford a mentor, you can't pay for a consultant, you can get a consultant, right? You can watch your podcast and then eventually you will find that answer, and then you'll dig more and you'll dig more and you'll go down that rabbit hole, and you find yourself learning. That's what I tell people all the time. It's not overnight. You don't just start Facebook and you're rich. It never happens like that. It just doesn't exist.
Success Story is part of the HubSpot podcast network. In the network, there are other incredible podcasts like The Ops Authority, hosted by Natalie Gingrich. Every week on The Ops Authority, Natalie discovers actionable strategies to move your business forward and transformational stories of powerhouse business owners who value operations. You can't ignore back-end pieces that have to work together and flow smoothly in order to build a brand, grow a movement, or disrupt an industry. If the operations side of your business is a mess, putting out fires will always take priority, leaving no room for creative innovation, visibility, or networking with powerhouse peers or even wannabe powerhouse peers. You got to get your house in order. And to do that, you have to listen to The Ops Authority wherever you get your podcast.
But I've heard you say this a few times, and I'm curious about your opinion on this, because the internet has lowered the barrier to entry and has increased the amount of bullshit that people talk online. And I have a theory on who you should listen to and who you shouldn't listen to. And I like people that talk about the worst shit that's happening to them because it just feels real. So when someone tells me, hey, this happened, I got sued, and they get really real and raw as opposed to like sugarcoating everything that's happened in their career, that's somebody that I have a little bit more trust with than somebody that's just assumed that since they were 20, it's been all up and to the right. So when you pick your sources for learning, for education, because again, you're a very real person, it's no bullshit. You say it like it is, which is good. It's the kind of person I like. How do you vet what, information to learn from?
I start off with one major thing that I think is a criteria for anyone you listen to, and that is, I would never really take advice from anyone that hasn't had to make a payroll. And what I mean by that is, so I at one point in my life when I was 28 or 29 years old, I had 3 Harvard MBAs that were older than me that worked for me. And I thought the answer was, I'll hire people smarter than me. And it is the answer, by the way, but careful who you hire that's smarter than you, right? The answer is, if I got an MBA from Harvard and I went to work for General Electric and I ultimately moved up to being a general manager of a division with 1,000 people, I may have had to cut expenses. I may have had to have it work in the organization that is GE, but I didn't have to start it from scratch, and I didn't have to make a payroll, right? They had the money. When you've had to make a payroll, it changes everything about who you are. When you're responsible for other people getting paid, it completely changes the narrative. And I see all these people, mastermind groups all the time, and I think to myself, did they have to make a payroll? Like, did they just become a consultant? Like, really understand who you're getting advice from is what's went wrong for them. Because if it's not went wrong for you, I could care less. I don't pay attention to it. Now, from an operational advice for best practice and ways of streamlining your business and looking at cutting costs once you're established, there's nothing wrong with consultants that can share ideas with you. But when you are building your own business, don't take advice from anyone that hasn't made a payroll. Never. I wouldn't do it, ever. That's just my opinion. I want to say something to you that's important, because people gloss over something about Grant Cardone. And even though Grant and I aren't really friends anymore, I will tell you something about him that if you really dig in, because I know you've interviewed him before. He was sued after doing a Reg A and allowing non-accredited investors to put money into his fund. And he was sued for something super petty. I read his prospectuses. They were accurate. It was all nonsense. And he spent millions of dollars defending it, and he ultimately won. And it was trivial. The person put in $5 or $10 grand. And The media made a big deal out of it. All these people on YouTube were experts, were saying, Grant Cardone, FBI, he's going down, he's this, he's that. And who knows whether that was ever going to happen or not. I can't speak to the other parts of his business. But it's so easy for people to bash Grant and not report what actually happened, that they make it up like he's under investigation and his real estate's a fraud. It's not true. You didn't have any information to say that. I read some of these financial guys, I uncover the financial facts, and they report it like it's a fact on Grant. And you see Grant, he's had to be battle-hardened. People have tried to take him down. And yet, I don't see anyone reporting right now that Grant was vindicated and that lawsuit was nonsense. And I'm not saying that nothing could ever happen to Grant in the future. I don't know Grant's business. But that's an example of a guy who has delivered checks monthly to people, opened up the door for them to be in real estate that they could otherwise not be in, and that people who are haters bash him and say stuff that's not true, and they ultimately don't report the facts. The fact is that Grant beat that case. And he spent money, and I've listened to his interviews saying, I spent the money to prove a point. I wasn't going to settle with this guy for 10 grand. Grant has that sitting in his pocket. He could have gave the money back to him, but he didn't. And that's what I'm saying. This is the same thing I do. I'm not going to settle for something that if Grant messed up, he would have gave him the money back. I promise you, if Grant made a mistake, he would have wired the guy the money back. And I've seen Grant do that. I knew a guy who was an investor with Grant, and he started questioning Grant all the time about his investments, and Grant wired the money back to him and said, I don't want your money. So we live in the world now, even with Grant not being public, he's like public because he gets bashed publicly. Now you could argue that, hey, if you're going to raise money from the public, you're going to get public criticism. But the reality is in this country, you can say whatever you want about someone and the facts don't have to be real. But in my world with the SEC and Grant's world, if your facts aren't real, ultimately that audit isn't real, they're going to catch you, right?
Yeah.
So you also have that, even as a private company, if you're a public figure, you're going to have haters that they'll be your biggest promoters, but they'll also do crazy stuff. And over in the pandemic time, when I saw what people were doing to Grant, I felt bad. I know the guy. I'm not saying we agree on everything, but he's exactly who he says he is. It was an example of him being, attacked pretty viciously by people that aren't really in the game. They're not really in the game. They're not really making payrolls. They're one guy on a podcast. They're not making a payroll.
I don't think the loudest people are the people that have their own businesses that are making payroll. I don't believe that at all. You get death threats. You get death threats on social.
Oh my God! If you come to our office, you better be armed. I'm not kidding.
You serious?
We have concealed carries all throughout this office. We have armed guards here. I've gotten so many death threats. Are you kidding me? At any given time, I'm carrying. That's why I moved to Vegas. You come to my house, you're going to get shot. You come on my property and you're basically not welcome there, and you propose a threat, you're going to get shot. There's no question. We take it very seriously here. We have security. We protect our employees the best we can. We have doors that are magnetic and all this other stuff because we get death threats all the time. I get them all the time. People want to kill me all the time, and no one's gotten to me yet.
Why? Why is what? First of all, has anything serious ever happened or no?
No, not really. I will tell you that the issue is that, and this actually makes me really troubled. I'll tell you why it makes me troubled. I don't mind that people threaten me. They're mad about something. The stock went down. I get that. But I didn't ask them to buy it. There's nobody out there that can show me anything I've ever done where I said, please buy my stock. Doesn't exist. I report the facts that I see them. I report what I think is accurate. Have we made mistakes? There's no question we've made mistakes in our judgment of our investments and what we thought was going to happen. We give forward indications. We tell people what we think would happen. They don't always happen perfectly. Forecasting is an imperfect science. But I get messages on my Instagram where people say, I put my life savings in this. I put my kids' life savings in it. I say to them, why? When did we ever say that you should put your life savings in one of our low-priced stocks on the New York Stock Exchange? We've never said that to them. I would never condone that to anybody. but yet they want to have someone to blame. And in fact, I can tell you why I know they're not paying attention, because they say I'm the CEO. I'm not even the CEO of Ault Alliance. There's another CEO. I'm the executive chairman. I haven't been the CEO for 3 years. I allocate capital, right? And yeah, I'm a public figure. But listen, it's part of the game. You know, the employees here at the corporate office have accepted the fact that we live in Nevada and we protect ourselves, and we don't think anything is ever going to happen. But we take it seriously. But it's my understanding that a lot of people get death threats. A lot of public CEOs get death threats, especially when their stock's not performing. And ours, unfortunately, has not performed like we liked it. And case in point, that's why I bought so much of it back. You know, I telegraphed that. I told shareholders, hey, if you're going to bombard our stock to zero, we're going to end up buying it back. And we at Ault & Company have bought a lot of Ault Alliance by investing in the company. We've already told people publicly we intend to take our investment from 44 million to 75 million and continue to invest in the company, and we will. But like you asked about death threats, listen, do I think about them all the time? No, but we're conscious of them. We pay attention to them. We have an extensive group, an outside agency that reads every single post. Believe it or not, this has gotten so ridiculous that we read every single post ever posted anywhere, dark web, regular web, and then they review them and they do a threat analysis. We've had sheriffs go to people's homes and we know who they are. We've contacted them directly. So you live in a universe nowadays where it's not hard to find people anymore. If you're going to go online and say something, I never knew there were so many of these kind of groups out there that could find who were saying it. So if you're a sleuth and you know how to say it without anyone catching you, be my guest. But we have an outside agency that reviews all of them, and we spend the money for it. And people don't realize that because I'm a public figure and an officer of the company has to cover my security. So the more you guys are all making problems, the more expensive it is to just be in business. It's crazy. It's not like I'm covering it. I can't pay for 24-hour security at the office. We have to pay for it. You know.
What's the exit plan for you? I mean, we started this even talking about the fact you never take a day off. So,
Scott, I want to say something to you. There's more to this story than you just heard either, too, by the way, and that is we are a single source supplier to IAI and the Israeli military. So 7 years ago, we invested in a company called Enertech, and we make missile guidance systems and other things that are top secret for the Israeli military, for the Iron Dome and for Arrow 3 and Arrow 4 missiles. And so I get grief on that too. Like I'm a bad guy because I make military equipment for Israel. Anything's possible, you know what I'm saying, in terms of what people want to blame you for, but I don't hide from it. I'm a defender of the Israeli government's right to defend themselves. And if people don't like that, then don't buy my stock. And frankly, if they don't like it, they can fuck off. That's the way I feel about it.
I agree.
Every country, every person, every country has the right to defend themselves. And I'm not saying Palestine doesn't have the right to have its own thing. And I know that they've had lots of offers. I am not in that political mess. It's way over my pay grade. But you're not going to tell us as a public company, you know, who we can do business with, especially if they're defending themselves. And it's a tough call. I know there's people that don't like that, and frankly, I don't care.
You know, so right now, you look at all the different. I want to see what your exit plan is, because it's always curious to me. Like when you build something public, there is no exit plan. All the entrepreneurs that I speak to, they have the exit plan, or they had the exit, and they sold and they exited, made some money, got a nice check. They can retire to a degree, even though everybody who built something meaningful never wants to retire, which is a whole other conversation. I think it's a personality. I think they're slightly delusional and crazy, and it's a personality thing that lets them be successful. But I do want to know where you want to take this. I'm super curious, especially because it's a lot. I mean, I don't think many people that I know have the experience of running a publicly traded company, dealing with death threats, understanding all the different things that are just sort of weighing on you on a day-to-day. So want to know where you plan to take it. But when you look at, you can comment on that. But I was also going to say, just from all the different companies that you sort of like have a hand in, and there's a whole bunch now, what's actually very exciting for you in terms of because you have real estate, you have defense, weapons, technology, you have Bitcoin, data centers, AI. What are some other exciting verticals maybe in the future? I know you said you have your sort of 5 core, but that would be exciting for you as somebody who can go and acquire.
We have a moratorium on new acquisitions.
I know you do.
We do. I would say to you in terms of categories, the categories we're in now, we're going to stay in. So we have AI, data center business for hosting for Bitcoin. We actually have our own Bitcoin miners, a crane company. I'll probably push the lender to do more public deals where we lend to other public companies. That's where we really make a lot of money. That's sort of our bread and butter long term. But if you looked at a growth curve, we just recently reported a quarter. The AI data center business is just so big and growing, and there's no way for the other companies to keep up with what's happening with AI. The fourth industrial revolution, which we're part of now because of our data center business, is it's screaming on fire. I cannot stress to people how much we're giving the company away. Now, while there's a lot of money that needs to be invested in our AI data centers, most of that will come from the debt markets. We don't really need a lot of equity anymore. We raised the money for that. Now, could we use a little equity? We always could use a little equity, but we really have said publicly that we plan on issuing the minimal equity possible. We'll tap the debt market, we'll tap the preferred market, but in terms of issuing common stock, we're going to try to keep that to a minimum and focus all of our energy on the cash generation that's coming from AI data centers, from cranes, from defense, from hotels, and from our lender. And we told the public that we thought by the end of 27 we were at above a $500 million a year run rate. And that could just be from the data center business. The data center business, the thirst for power and AI compute and sort of this fourth industrial revolution with NVIDIA and what's happening with AMD and all the different AI companies out there, and the demand for compute is so off the Richter scale. And we as a country are not paying attention to the fact that we need power. People say it out loud. And they say we want to be green and all this, but you cannot do what you're doing without power. And we have power. We have 20 megawatts in Montana. We believe that'll grow to over 250, around 250. And we have 30 megawatts live. We're not actually, a lot of companies talk about what they're gonna have. We have it live. We're already mining millions and millions of dollars worth of Bitcoin a year there. I think we did more than 50 million last year. I don't know the exact number. And so if you just looked at us and said, what's your exit plan? I want to run a holding company the rest of my life. I'm 54 years old. I'm finally losing weight. I look like I'm a little thinner here, actually. I'm just kidding.
Hey, you look good.
Yeah.
That's his last time we spoke.
That's called Ozempic, right? Someone said, Todd, when you were fatter than you are, you put the ick in Ozempic. So I'm trying to lose a little weight here. And that's a miracle drug in itself, right? But I anticipate running a public holding company. That could change. But right now, we're on the plan of just building out the AI data centers. The guy who runs our crane business came from Berkshire Hathaway subsidiary. He's this very talented guy. The person who runs our defense business, we're very comfortable with. Our hotels are managed by someone second to none in the hotel management business. And we're very comfortable with the guy who runs our AI data centers, Jay Looney, who came from the data center business. So we really refined who's running these things. And so we're really comfortable with it. We probably will spin off. We've talked about spinning off some of the other assets to shareholders so that they're not part of our consolidated portfolio, kind of staying in the sort of the major big four or big five that we have. But the AI business, the data center business, will ultimately dominate our revenue. It's just like a venture portfolio. You ultimately look at all the things you have, and just 5 things do okay, 5 things lose money, 5 things make a lot of money, and then 1 or 2 outliers go crazy. The data center businesses could be an outlier for us. You never know. And my suspicion is that'll drive our AI data center business will drive pretty much all of our long-term profitability. That like really matters in terms of scale. And ultimately, those businesses are being bought up by people like Digital Realty, Digital Bridge. You know, the big players in that space are soaking up all that power. So if we got a big enough check, we'd probably take it, but that's a ways off.
Tell me something, because you're building out your brand. You have a conference, Risk On 360. Obviously, you're jumping on podcasts too. Does this not, at the level that you're playing at, does it not cause more stress for you to be putting yourself out there all the time? It's just like more eyeballs looking at what you're doing, and you're already getting death threats, or you don't give a shit.
Yeah, I don't care. I don't care about the death threats. I don't care about that part. I care about, so the Risk On 360 conference, what we've done differently with this conference than most of them is, like if you went to some of the Grant's 10X conferences, there was so much pay to get access. It was so expensive. We wanted to lower the cost of that and really create an environment of like, I know we're going to try to get you there. We want to create an environment where people can know each other and that there's at least a level of trust of how they met you and that the cost is minimal to be there. And I've had, I believe, 2 of them so far, 2 or 3. And we've had like Alice Rodriguez, we've had Damon John, we've had tons of people, Tucker Carlson, RFK Jr., a ton of entrepreneurs, guys that have started businesses, girls that have started businesses. And we know that the people are networking in a big way. I find out this later on that a lot of business is being created there. And one of the things I got out of Grant Cardone was all the people I met there. But the cost was so parabolic that it was like, you know, 50 grand pay to play, right? And I'm like, the average person can't afford that. And it's not that I don't want the average person there, but I want people to have a reasonable opportunity to go meet people and network, right? And then you got to feather out who's real, who's not. But I ultimately think because the companies will ultimately turn cash flow positive, EBITDA positive, and we expect to produce a lot of cash long term, that I like investing. I've created this thing. You know, I'm so excited about the social club, what you have, and I encourage people that have had an exit or understand financial markets, private equity, public equity, private credit, public credit, to learn about the social club, because I think that these are really valuable things to put together. You don't all have to be a Tiger 21. If you don't know what I'm referring to, either Tiger 21 or the social club that Scott runs, then you probably need to do a little research. It'll eventually rise up to where, you know, as an entrepreneur, where you want to be. And there's criteria to get in. I'm not suggesting everyone can be in, but I've created something not the same, but similar in the sense that I created this thing called the dealalliance.com. And the Deal Alliance allows people that are accredited to just see the deals I'm doing, and they can join me or not join me. It's the problem I have with this is that when I started my career 34 years ago, when I worked at Dean Witter, I did so many IPOs that I was giving them out to brokers as a syndicate manager. And I've never really had an opportunity to tell everyone, here's the private deal or public deal I'm doing. If you want to have access to it, you got to be accredited. Here's the deal memo. Here's my thesis. Make your selection. Very similar to Calanis, Jason, who's doing the syndicate. Yeah,
Jason Calacanis, and I'm part of his Slack channel, and he does all of his deals through there too. I can't remember what it's called, but
right. And so, but mine are more like structured equity, structured finance. Some sort of elaborate transaction that I'm doing. I do a lot of structured finance deals where I want 100 people in them. They all put in 50 grand or something, So I do this public stuff because I believe that ultimately I can help people. And that's why I did your podcast. That's why I hope you did mine. And it's because I like to network with people and get to know what they're doing. I'm probably more selective on the deals I do now than ever before. But I do believe that we can ultimately help everyone. There's someone out there to help every person, no matter how small or no matter how big they are. Well, over $150 million, $200 million company, I'm probably not the guy for you. But maybe, you never know.
Yeah, but you know what? You get somebody started. So you democratize access to deals, to education, to your years of experience. Because you've been in the trenches, which is what people actually need. They don't need somebody who built a whole audience on social media and is teaching somebody to do something they've never done themselves. Big red flag, and that happens a lot. So when someone like you puts themselves out there, democratizes that access and sort of helps them get started from a lens of experience, then some people are going to go on to build incredible things, whether or not they become full-time investors, they find a way to do a deal that gives them the capital required to maybe take their business to the next level, or not take another job because now they have a nice nest egg to sit on for a little bit, whatever it is. More financial acumen and more financial education and access to deals that you normally wouldn't have access to. This is all good. It's all good stuff. So I think that it's just good that you're doing it. That's my two cents.
I will tell you that that's what I think attracted me to you, and that is, warts and all, you don't want to be doing business with someone, in my opinion, that's just a social media popular person that's not ever done it before. Now, sometimes the people that have done it before don't really present well in social media, right? So there's a mix of me doing this myself to try to explain to people. I get people all the time to say, oh, your background, you got sued. Okay, well, let me tell you something. If you're looking for people to help you that have never had any problems, keep looking, buddy. In 2009, when I was dead broke after the housing crisis, I borrowed $200 from my mom. I mean, I couldn't pay my bills. I couldn't put food on the table. Fast forward 7 years from 2009, I brought a company public that I owned half of for more than $3.3 billion. That was the first trade. It went public at 5, opened at 33. You have to have access to people. And my whole life is based on this risk-on philosophy that relationships are the most important thing. They're the most vital. You have to invest in yourself. You have to stay your own course. You have to know your competition. You have to own your own mistakes, and you have to never give up. But if you start with relationships that are honest, you can get through pretty much anything as long as you don't lie to anybody. As long as you don't lie to them, people will want to help you. And I want to help people the best I can, and I need to avoid people lying to me. And so I love the conference because you meet a lot of people in all. I met this guy the other day in Bermuda, an 18-year-old kid doing something called microgreens. And I thought, okay, is that really a business? Maybe it is. And then I found out that he's doing microgreens so you can feed your reptiles. And I said to him, hey, the pet space is huge for this. And I said to him, hey, if you create a GoFundMe account, or what's that thing where you can sell microgreens and get paid? It's you can sell your idea. You know that web Kickstarter.
Yeah.
I said I'll do the first. He said I only need $10,000. I said I'll do the first 10%, but you got to ask for 50,000. I'll do the first 10% right now. So sometimes I like to help people that just have a really cool idea, and we'll see where it goes. I'm a true believer, and I'm not a religious guy, but I'm a true believer that there's something bigger than us. And the more you give away, you're going to get it back tenfold. I'm a real believer in that. And so the conference, we don't make money really much at it. I don't know that we actually make a profit at the conference, really, when you think about it. But we make a lot of relationships that turn into things. And so, I don't think you charge for people on your podcast, but you probably get a lot of relationships from it, right? And you're giving away a lot of your time to educate people on something that I think is invaluable. There's nothing more important than learning whether someone's ever made a payroll or not, and how they made it through it, and how they got help. Because you will need help.
What?
Because an entrepreneur, anyone who's starting a business is fooling himself if they don't think they're going to need help.
How do you gauge success? How do you gauge your success?
My wife. I gauge all my success on the relationship I have with my wife and my 4 kids. So everything else is just a business. So now you're probably saying, well, you had to have some financial success to keep a family. That's true. But she stayed with me when I didn't have a dollar, never complained, not even for 1 second. So you'll like I said about the R in relationships, the hardest part about being an entrepreneur is being married to the right human being. Whether you're male or female, you have to have the right counterparty with you, with the right mindset. My first wife basically said to me one time, and I wasn't paying attention to this. I worked and ran a hedge fund, and she said, it would be nice if you came home at 5 o'clock and left your work behind. And I said, well, that's never going to happen. And sure enough, a couple months later, she divorced me. So I wasn't thinking that when I answered the question, it's never going to happen, that was going to lead to divorce. And that's probably not the only reason she left me. But the second time, which is usually better, the second time I said to her, you have to accept $50,000 or $500,000. I never know what I'm going to make, and I work all the time, and this is what I'm committed to. And she signed up for it, and it's been a rocky roller coaster fun ride.
But you set expectations, that's the secret. You set expectations early on. I think that's when people screw up. All right. What did we not go into? Because we went into a lot today. I just have a couple, one last question to close it out, just to tie it and bring it home. But what would be one thing that we didn't go into, that I didn't ask you, maybe that I wouldn't know to ask you from all the stuff you posted online, that would be a lesson or insight or learning that you've experienced in your life?
So I did learn to schedule my worry. And what I mean by that is, this is just something that could be helpful, and that is, I have things that happen to me every single day that are a problem every day. They're just a problem. My wife says I wake up to problems as a fireman that people, if they experience it once in their life, would not recover from it, and I have it weekly and daily. I have a strategy of scheduling my worry. It's about 15 to 30 minutes a day. I only allow myself to worry that time frame. The rest is all taking action to solve those problems. So if you can schedule your worry, don't drag it out. Don't tell 1,000 people. And I'll emphasize that by, if you don't have a business coach or a life coach, I've been seeing the same shrink for 24 years. I never miss. I've been seeing her every Saturday now by Zoom because I live in Vegas. I've been seeing her 1 hour a week for 24 years since my first divorce. And if you're not talking to someone, and if you're not laying your issues with someone you pay to coach you, you're making a mistake. I mean an actual licensed therapist, someone that can help you with whatever issues you think you have. And they have to be really able to help you, meaning they're not giving you the answers, they're helping you find the answers. And I would encourage everyone to read 2 books and read them completely. The Road Less Traveled, the original by M. Scott Peck, and it tells you in the first page what the problem is. And I remind myself of that all the time, and I would read Napoleon Hill's Think and Grow Rich, even though it's written in a way which is kind of the old English language. It's important to understand why you're doing something, what you're giving in return, right? If you understand the difficulties of being a human being, and you understand the difficulties of being in business from Napoleon Hill, you're halfway there. But you really got to understand it. You can't just say you read it. You got to live it.
I would say that's good advice coming from somebody who apparently reads, 60 to 70 books a year?
If that's not,
those are the top 2.
That's the minimum. I was thinking about this last night. I was flying home and I was reading a new book called The Fund about Ray Dalio. The amount of consuming data that I consume. Well, right now I'm on this mission to watch every podcast you have, which, by the way, holy shit, that's going to take me a while.
It's okay.
Yeah, I would.
You got a couple of trips in you.
Yeah, exactly.
A couple of flights in.
Exactly. Be on a mission to consume data, but you got to take care of yourself first, right? So you've got to figure out what makes you happy, right? Really, really what makes you happy. Because if you think somehow there's an ending, I was thinking about this the other day. Like, I'm a fairly rich guy now. Like, I'm not super rich, but I got access to a lot of stuff. And there's no ending. It doesn't end. It's just a new set of problems. Now, they're good problems to have, but they're just first world problems. No one cares about my first world problems. Nobody. You have to care about them, right? And so in your world, whoever world you're talking to, They have their own problems right now, their own first world problems, right? You got to be able to talk to someone about them. You got to, and not someone that's going to tell you what you want to hear. Like, you know, someone who, well, we're all psychologically damaged to some extent, right? And so do we actually tell ourselves the truth? It's probably ourselves that we lie to the most, right? I think having a good therapist, someone you can trust, is a good start. And a lot of guys won't do this. They won't have a therapist or someone they can talk to. And I'm not talking about paying a guy $100,000 for 5 sessions. I'm talking about a therapist, someone that you can talk to about your issues and find the right person. It's hard to do, but you got to find the right person. Because if you're going to be an entrepreneur, if you're going to make a payroll, it's going to be a lonely space for you to be in.
But I think that's super important. And I think that the classic issue with entrepreneurs is they think they're smarter than everyone else.
Oh yeah, they do.
And then yeah.
If you're going to be an entrepreneur, you're going to get your teeth kicked in. Sorry, it's not easy. There's occasionally the guy that gets lucky who everything goes swimmingly, and his dad and mom lend him $2 million, and but he didn't really have to make a payroll. Wait till you have to make a payroll. Make a payroll. Make a few of them. You'll figure it out very quickly.
Where should people go to connect with you? What's the website, socials, all that for a conference, for anything really? Your podcast?
Go to riskon360.com. I have a website, toddault.com, TODDAULT. I have thedealalliance.com. On social media, I'm Todd Ault the third, so 123. I'm verified on Instagram. I think there's like 2 million followers there. It's not hard to find me. There's a couple bogus accounts, but go to the ones that are verified. I'm everywhere. And, I try to post everywhere always. I'm a pretty transparent guy, but it's really easy to get a hold of me. Or you can text ROI to 31798, ROI to 31798. I think you'd even text Todd Ault to 31798. I've got so much access. You can text TDA, the Deal Alliance TDA to 26786. I'm pretty much available everywhere, and it's all over my social media. You can't miss it.
Okay, so people will find you some way or another, and put some links in the show notes too. Okay, last question, which I think is, you've gone through so many seasons in your life. You grew up in HUD housing, so you grew up poor. You grew up very, very poor. So you look back, what would be one lesson? I know you've given tons of insight, but just pick something new. Humor me. One lesson you would tell your 20-year-old self.
You don't know what you're talking about. I grew up in HUD housing till I was 13. My mom married a guy who adopted me. I took his name. People confuse something about me. Here's an anecdote. The company's not named after me. I was adopted by my dad, and my grandfather, who was my adopted grandfather, gave me $1,400, which I paid him back to start the company when I was 18 years old. I wrote in my yearbook that I would start this company when I was in high school. And my 20-year-old self would, this is by design, I will tell you, you asked probably the perfect question. I would not think I knew all the answers. I would tell my 20-year-old self to go and get a mentor or someone I could learn from, go work for someone that I could understand, and read and study. In the beginning, the first probably 8 or 9 years of my life, when I became a business person, I did almost no reading and studying. I didn't really understand. It was till I failed the first time that I really understood that I didn't know what I was doing. And you don't really know what you're doing until you've had to make a payroll, produce financials, and have credible financials, meaning financials. There's a guy named Tillman Fertitta that I had the privilege of helping bring his company public when I was a very young guy. Believe it or not, Landry Seafood was public for a short time. He hated being public. He went private later. But one thing he used to say that I thought resonated was, you must know your numbers. Don't be arrogant enough to be the boss and tell people, I don't know the answer. You need to know the answer very quickly. And the arrogance of being 20 was my downfall. The arrogance of thinking I knew better was my downfall, right? The overconfidence in my expectations on how quickly I'd grow and what I could sell, right? So I would probably tell myself that I needed to learn a lot more. The idea of going to get your education in college, really today, unless you're going to be a scientist or a doctor, is about you starting something and completing it. I have a son that went to UCLA. He came out a much more educated guy than I thought he would. Really brilliant kid, right? Who learned in college. Go learn something, 20-year-old Todd. Learn it. Don't act like you know it. Don't fake it till you make it. Learn it. And just admit you don't know. That's what I would tell myself. And that's what I would tell all these entrepreneurs. I see them out there buying cars and Lambos, and they're doing social media stuff, and they're getting endorsement deals. This is all going to go away. You guys are all fools. You think you're all going to have these social media deals that happen forever, or you're going to be Kim Kardashian? You're not going to be. You got to be yourself, right? You can learn from other people, but be yourself. And that's a hard thing to do. Like, I'm 54 years old. I've only recently accepted that I am who I am, right? In the last probably 10% of my life so far, last 5 years, I've ultimately accepted that while I wanted to be like Warren Buffett, I was not, right? He's always sort of been Kirk Kerkorian and Carl Icahn have been my sort of like financial mentors that really Kirk Kerkorian's probably the most I align myself with. I would tell yourself to learn and that you don't know what you're talking about yet. You don't know at 20, I promise you. You don't know.